Okay, everyone, we have to talk, and this is serious. This could be your last time to sell right now. All right, we're going to break down the VIX, go over many different VIX charts, which is the volatility index of the market. We are seeing signs that we have not seen since the last time that the bear market started. Okay, that was the last time that we saw these signals. Right here, we have the VIX 9-day chart. All right, so this is measuring the 9-day volatility of the S&P 500. This was the 2022 all-time highs, guys. Okay, and we are retesting this previous demand zone right before the bear market started. And we're there currently. We have bullish divergence, which is when you have a low and then a lower low on the price, right? So price action is going lower, but on your relative strength index, we have a low and a higher low. So we actually have a bullish trend line. We're increasing in relative strength as the VIX 9-day volatility chart is decreasing in price. Not only that, we are very close to getting a buy signal on the MACD. The red line is trying to curl back up above the yellow line. That is typically known as a buy signal. We can see over here when we got a crossover, we had a very strong push to the upside. Over here, when we had a crossover, we had a mega push to the upside. Over here, when the bear market began, we had a huge push to the upside after those signals. And time again, that's been a really big signal. So I'm going to break down why as well, guys. If you haven't seen, all right, this is what the news is pumping out right now. Okay, they're pumping out lots of fear and lots of things related to the war. Okay, they're saying that Vladimir Putin is preparing to attack the UK, that he's sending spy ships out there to map wind farms and cables, and that Russia-linked hackers are a huge threat to UK infrastructure, warns the minister. All right, so these are just some of the things that may start the volatility in the stock market to really skyrocket. I have some amazing charts as well that you're not going to find anywhere else. So make sure to smash that like button and subscribe to the channel if you guys are new. All right, now, before we go any further, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, crypto, and day trading, it all involves a significant risk of loss and may not be suitable for all investors. So be sure to read through the full disclaimer before moving forward, and we'll go ahead and jump right into it. Now, what we have here, guys, is the VIX divided by the VVIX. This is the daily chart structure right here, okay? And so we saw a bullish 5-wave structure with an ABCDE correction. Okay. So typically the market moves in 5-wave and 3-wave structure. So we got our bullish 5-wave count. And once you complete that 5-wave, you're going to look for some type of a correction wave. Now, typically you would just get an ABC, but sometimes you get these ABCDE correction waves as well, right? And a lot of time those form, chart patterns, right? And so what we can see here is we've tested this trend line on the bottom many times, okay, about 4 or 5 times. And we've tested this trend line on the top here many times as well. And this put in a falling wedge. Now, if this is going to play out with this structure right here, we're going to see a large move to the upside. Okay. And so when you look at this ratio, the VIX divided by the VVIX, what this is this is measuring the VIX divided by the volatility of the volatility index. That may seem like a lot, may seem a little overcomplicated, but essentially what you're looking at is that volatility and implied volatility is really cheap right now. Okay, that's essentially what it's telling you, is that if you wanted to purchase volatility, it's actually kind of at a cheap level right now. So that's essentially what you're looking at. Okay, now to really put this into effect more for you guys, this is if you look up ending diagonal / the falling wedge, or you look up these ABCDE corrections, right? You can see we had the 1, 2, 3, 4, 5. And then we got an ABCDE, and then we get a strong 3-wave move out of there, right? And same thing here, 1, 2, 3, 4, 5, and then we get a strong 1, 2, 3 out of there, right? With price sitting at resistance comes up, and then we get a pullback and push. That's exactly the setup that we have. We have our 1, 2, 3, 4, 5. Then we got our ABCDE correction, and we look for a push up, and then a pullback, and then another large move to the upside. So, that's what I'm looking at here currently, guys. Not only is that going on, I showed you guys the VIX 9-day chart. Okay, that's also, testing lows that we haven't seen since the bear market began. This is the VIX divided by VVIX chart versus the S&P 500. So we have the S&P 500 here in red, and take a look, guys. It's almost been exactly a year. This is April 11th of 2022 was the last time that we were this low on this ratio chart of the VIX divided by the VVIX. Okay, and take a look at where we're at. We're literally right at those levels right now. Okay. And we're seeing that volatility is very cheap right now if you wanted to purchase volatility. And take a look what happened afterwards, guys. Within the next 6 to 7 months, the S&P 500, okay, is this red line right here. This thing dropped about 23%, guys, the last time that we were at this level on the VIX divided by VVIX ratio chart. So, this is something that has my full attention right now. Not only do we have, us testing those levels, we're getting very clean structures at the moment. Now, these structures are never going to be guaranteed to play out 100% of the time, but it is, setting up very nicely right now to see a large spike in volatility. Also in the beginning of the year last year is when Putin invaded Ukraine. And now what are we seeing, guys? It's almost like we live in a simulation. We're retesting previous lows, and we're seeing news headlines now about Putin possibly invading the UK itself. Now, do I think that that's going to happen? I'm not positive, right? I can't really predict the future. I'm here to just give you guys some data, right? And then, just show you guys some of the news that the market is reacting to or will react to, okay? So we're going to move on. I have some better charts as well we're going to go into. This is the VVIX itself, okay? So just the VVIX, the volatility of the VIX, right? Now you can see that we are retesting this previous supply zone here currently at the moment, and we've seen the VVIX, right? The implied volatility, the volatility of the VIX has been skyrocketing, right? It's gone up 23% in the past 3 trading days alone. It's retesting this previous level right here. And if we break through this level, we really could see a big spike in volatility in the market. Now, if we end up rejecting this level, there is a chance that this could actually be a head and shoulders, right? We have a clear left shoulder here, we have a clear head, and this is a clear right shoulder at the moment. So if this previous supply zone that pushed us down further ends up happening, we could actually see volatility continue to drop. But with, some of these news headlines they're putting out, with earnings season really just kicking off, right? We haven't even got Apple yet. We got Tesla today. We had Netflix the other day. There's going to be, a potential storm brewing right now. Okay. And, if the certain market conditions are met and, certain catalysts happen, we're really going to see what looks like, in my opinion, a huge spike in volatility in the stock market coming soon. All right. This is the VIX daily chart right here. So just the regular old VIX. Okay. And what we can see is that VIX is very one directional. All right. So it tends to trade in these little falling wedges and then get a strong 3-wave breakout afterwards. Right. And then it trades one direction for a long time in this, falling wedge. And then you get a 3-wave breakout to the upside. And then you see here doing it again, trading in this falling wedge, get a 3-wave breakout. And over here, most recently, okay, we actually saw the VIX, trading down in this falling wedge, and we didn't get a 3-wave breakout, guys. We actually broke out and then continued heading back lower. And this has fueled a lot of the rally in the market, okay? Inflation has been showing signs of peaking, and we have been seeing inflation starting to go down on the CPI reports. And we've seen volatility in the market drop as a result. Now, where are we at right now? We had a big spike here recently. We formed another falling wedge, and it's potential that the VIX could repeat the pattern that it's repeated over the last year of getting a breakout in a nice 3-wave structure and seeing a huge spike in volatility in the market, right? Now that pattern hasn't always worked, but out of the past 4 times, 3 of the past 4, with the exception here, have worked. So, this is another thing that I'm looking at, guys. Now, not only that, but we have bullish divergence on our MACD right here, and we have bullish divergence on our relative strength index, right? Remember what that is. That's when you have a low and then a lower low on the price action. So clearly price is going lower, but we're seeing a low and a higher low on the MACD. We're seeing lows and higher lows here off of the relative strength index as well. So we're increasing in relative strength when it comes to volatility. Even though price is actually going lower, that's a simple term known as bullish divergence. So I really just wanted to make this video for you guys today, just to kind of warn some people. Okay, I try not to be overly bearish or overly bullish, and really just have everything be more data based and current setups, whether it's the chart, whether it's the news, whether it's some macroeconomic data. And I think that volatility really just touching these lows that we haven't seen in a very long time, right? Even if we take a look at the VIX, we haven't been at these levels since the beginning of the bear market in 2022, right over here, right? If we take a look, those are the levels, guys, that we're testing right now. We're actually lower, okay, than where we were at the very beginning of the stock market in 2022, which is a little concerning to me right now. Like, how are all of the news headlines, every news station everywhere screaming that a recession is coming this year, recession is coming, recession is coming. But meanwhile, the stock market is seeing record low volatility, and we haven't seen volatility this low since the bear market actually began. So that's it for today's video. Hopefully you enjoyed. If you did, smash that like button, subscribe to the channel, and I'm out.